What's up, everyone? So today's focus is going to be all about helping you achieve your financial freedom, give you a roadmap that you can actually follow that will lead you towards your financial freedom goals. So that is different for every single person. What I want to do is spotlight basically what my journey has looked like quickly, and then go into exactly what you can do to achieve the results that you need to become financially free, regardless of where you're starting out. So with that being said, let's just get right into it. All right. So if you want real financial freedom, you need to understand two things first. You need to have clarity on where do you stand today financially. Have you done a financial audit? Do you know where you financially stand right now? And then you need to then have clarity on where do you want to get to. Once you have both your current picture and your end goal in mind, then you just have to choose the right investment path, which becomes much more simple when it's clear on what you're focused on right now. I think the hard part for most people is they allow marketing and gurus and whatever to come in and tell them what they should be focusing on, when in reality, you need to understand where do you stand and where do you want to get to, and then what is the path that actually gets you there, not all the cool buzzwords and ads and all that other stuff people are sharing with. Remember, every single person is starting from a different place. So throughout my entire investing journey, I was at different stages and I had to choose what was the most important path for me to focus on to then level up to the next stage. The overall goal for the majority of people that at least follow me is you want true financial freedom. You want to purchase assets, you want to own assets, let's say rental properties, right? That then pay you enough money so you never have to work again and you get to enjoy your life, right? You bought 10 properties, that pays you $10,000 a month. Now you no longer have to work because that covers all of your living expenses. That is the goal for the vast majority of people. Whether that number is 5,000, 10,000, 20 plus thousand, whatever your goal is, that's usually what the end goal is for most people. But it's hard to say someone with no money, no experience, no nothing, you're going to achieve that in 1 year. That's not really practical because everyone is starting at a different point. So it's the goal is to understand where do you start and then how do you get to the next step, to the next step, to the next step. I'm going to break that down during today's training. So just to spotlight a few quick things for you all, I have been able to make some massive strides in my financial freedom journey because of the fact that I've been very intentional from the very start. Since 2016, every single month, I've been tracking my net worth. During that time, I was still in school. I was in college. I was at UC San Diego studying. And the first great financial decision I made was to shift from wanting to be a doctor to an engineer. It was more of a practical decision. I knew that I wanted to help people. It didn't mean I had to do open heart surgery to do so. It just meant how can I help solve some bigger problems? And then the main motivation for choosing engineering was how within just my undergraduate degree, how within 4 to 5 years can I develop enough skills to then get paid $80,000 or more a year shortly after graduating. If I was going to be a doctor, it was going to take me 5, 10 extra years. Sure, I could make more money for my job, but it was going to take 10 years before I could actually start making any real money. And I'd be in a bunch more debt. So that was the first great decision I made in college. And I also worked multiple jobs during that time. So I'm going to show you guys is what my roadmap has looked like, how I've gone from negative $26,000 in student debt in 2016 to where we're at today and kind of what that journey has looked like. But then more importantly, how you can do this for yourself. And then once you do this, you can clearly define how are you going to achieve the goals that you want. So in 2016, we started off with negative 26,500. And when I say we, my wife and I have been together since high school. So we've gone through this whole journey together, both good and bad, right? From literally making no money and working multiple jobs the entire time throughout school, having to pay for everything and having to basically skip out on a lot of stuff because we didn't have the financial support. We had to do it for ourselves, all the way to where we're at now, being fully financially free before we both turned 30 years old to enjoy all of our time with our family. And I still continue to work, but only on the things that I care about and I can stop at any point. That's the ideal goal for most people. Usually it's hard to become financially free. You don't have the mindset of like, I'm going to put in the work. You usually have to be willing to put in the work. And then even once you can retire, you still continue to work just more on your own terms. So looking at this, negative $26,500, all of that was basically student loan debt. I had very little money in the bank, virtually nothing. And I was working multiple jobs at campus to pay for all of our, my wife and I are both working, paying for our living expenses and all that good stuff. And I've been tracking this literally every single month. And I'm going to give you guys a free tool so you can track it for yourself. But I wanted to just show you what this journey has looked like for us so you can do something similar for yourself. Then, graduated college in 2017. We're able to pay off a little bit of debt by working multiple jobs. Most of that came near the end of the year after graduating and working full time, but graduated with my chemical engineering degree. I started a side hustle, a reusable straw company. I would sell metal straws to businesses that wanted to buy them in bulk. That made a decent amount of side income. And primarily I did that because of my passion for, the environment. So that was a big part of it. And it also made some additional side income. And we're able to really drop the prices of these reusable products by just cutting pricing compared to everyone else. Everyone was buying the same stuff from China. We just offered it at a much lower price because I just got out of college. I didn't need to profit the same amount that some of these major companies did. At that same time, I was also working 2 jobs. So an environmental engineering job, as well as I picked up a night job as a leasing specialist at a apartment complex because I wanted to learn more about real estate and I wanted to get paid to learn that. So between that, paid off around $6,000 in debt. Great. Well, going into that, my reusable straw business growing and joining the military in 2018, we were able to make a massive shift of almost $50,000 growth. Some of that came from just savings and earnings, but then part of that also came from what I was able to slowly start investing in the stock market, and things started just going up. I got a couple of great investments during that time. Actually, that's the year I started investing in Bitcoin too, either 2017 or 2018. One of those years, choice time to invest. That's pre-$10,000 Bitcoin price. I continued to grow. My stocks continue to grow. We just continue to save. We basically lived off my wife's lower income and saved all of my money for the most part to be able to invest. At that point, my plan was to become financially free through the stock market. So we invested all of our money that we had into the stock market. It did its job. It grew our portfolio, but it wasn't really what was going to allow us to achieve true financial freedom. What we needed to do that was to get a much bigger portfolio and to cut some of our major expenses, which is what 2020 comes in. And real estate really changed the entire trajectory, especially in 2023. So 2019 was a huge year for us, massive stock market growth. The straw business kept doing good, basically saved all of my income and invested it while living off my wife's. In 2020, I was auditing just not our net worth, but also our budget. I identified one of our biggest possible expenses that we're spending every single month is on housing. We were renting a property and like the 50% of our budget was going towards rent. Everything else was the remainder, right? So it was like, how do we cut that? That was really the start of my real estate investing. I knew I wanted to invest in real estate in 2018. I just didn't know what my strategy was going to be. And when I realized, okay, well, we're living in a duplex. There's a tenant that lives below us. We live upstairs. Why don't we just do the same thing? So that's exactly what we did. We used my VA loan to buy a 2-unit property, lived in one unit and rented out the other. So we went from paying our biggest expense was housing. Well, we ended up turning that into no expense because our tenant was living there covering the entire mortgage and utilities. And we even made a little bit of money each month. And once we moved out, we were going to make over $1,000 a month on top of that. That sparked and just ignited my entire interest in real estate investing like to a whole other level. I was hooked and I knew real estate was going to be the thing. I was not going to sell any of my stocks and I was going to continue investing some of my money in stocks, but real estate was going to be my path to financial freedom at a much quicker trajectory. That's why you see some massive growth in 2020. Yes, stocks went up, COVID crash. I needed less money than I was expecting to buy the property. So we put that extra money in the stock market. We were fortunate that the timing in which we put that money was between March to May of 2020, the time we were under contract to closing in 2020. And then the stocks crashed and then exploded up in value. So we had a tremendous amount of growth in 2020. Same with 2021, but we also bought 2 more properties in 2021. So once again, same thing. This was a 4-unit house hack and then 20 rental cabins that we bought leveraging creative financing. So we bought it using none of our own money. It was the bank and the seller basically paid all of our costs to buy this property. Awesome. Some massive changes there. A lot slower in 2022, both because the stock market, but also because at that point, we had enough money coming in from these 3 properties. We never had to work again. It covered all of my income, was replicated through our real estate portfolio from 3 big transactions, the 20 rental cabins and 2 multi-unit properties. So at that point, we said, you know what? I've had a great 4 years in the military. I went from brand new officer to Army captain by the time I got out. And we said, this has been great. I've done everything that I've wanted to. I've served our country, a huge thing for me. And we decided to get out of the military, moved out of Alaska back to California, where our family's from, went to San Diego, even though we had financial freedom through real estate, especially in Alaska, it wasn't going to cover us in a life that we wanted to live in San Diego, nor like I was not going to stop working at like 25, 26 years old or whatever I was at the time, mid to late 20s. That didn't feel appropriate to stop working at that point. Basically, my wife retired. I picked up another job and we just continued growing our real estate portfolio. But everything really changed for me in 2022 because I made the shift to really start investing in myself to develop my skills as much as possible to allow me to buy even more real estate. At this point, I had a 2-unit, a 4-unit, 20 rental cabins. We bought our first $1 million+ property in San Diego, a 3-unit property, once again through a house hack. At that point, it was pretty apparent that what we needed to do was continue doing real estate, but I could not grow at the pace that I wanted to unless I invested in my education. Ironically enough, I said pace, right? So what I decided to do was join the sub 2 community with my mentor, Pace Morby, and I started piecing together some of the key things that separated the most successful investors from those that were not nearly as successful. The community now has over 17,000 people. You can't say all 17,000 people have a portfolio or even properties in general. It really depends on what you do in that community, and that's with any education. You pay for education, it means nothing unless you learn as much as you can, but then actually execute on the information and then gather all the key resources from those communities. For me, it was clear. I need to buy more creatively financed deals because I can buy them using less of my own money, and I can like lower down payments, lower interest rates, which means more cash flow. I was going all in on the co-living space or the rent by the room space because it made the most sense financially. I was able to buy bigger, better properties in better markets. I was able to get thousands of dollars of cash flow instead of $100 or $200. And I was able to buy properties in bigger, better markets, so they also appreciate more in value. These properties build more wealth more quickly, as opposed to just focusing on just the cash flow, which many investors do, which is why they buy $80,000 Section 8 properties in Missouri, but they're leaving so much money on the table because of the wealth benefits that come from real estate. And that's where I went all in on 2023, what I call the super investor cheat code. My investment strategy was creatively financed deals, manage them as co-living, but most importantly, buy those properties using none of my own money. So I find great investments. I will be the one to find it and operate the whole thing. I'm going to find others that are interested in real estate investing, right? Find other people interested in real estate investing that have money, but may have less time or experience. And then we're going to co-own these properties together. So capital raising, the third key C of my investment strategy: co-living, creative finance, capital raising. The thing you won't see on here is although our net worth has exploded from 2023 to 2025 to just under $1.5 million of net worth, what this doesn't account for is any of my real estate equity. This doesn't account for any of my real estate equity except the equity that comes from this duplex. Actually, we sold this duplex that comes from the 2 properties that I bought, the 4-unit, the rental cabins, and the 3-unit property in San Diego. Why do I not account for the equity that has been built in my real estate portfolio since 2023 to 2025? Well, I currently own over $25 million of real estate, right? I've grown it over $23 million in less than, or like in the last 3 years alone. The reason why I don't account for that is I have almost $5 million of equity in my real estate portfolio that's not accounted for here. So it'd be pretty crazy for you to see these numbers and you see millions and millions added here because that's not as tangible for everyone. So this could easily show $6.5 million because my real estate portfolio is around 25 million and our debts on that portfolio is around 20 million. That $5-ish million of equity is added here. Pretty much at this point, I could do nothing and my net worth continues to grow around close to, several $100,000 a year from just our existing portfolio through our debts being paid down by our tenants, right? They pay us, we pay the mortgages and the expenses, we keep the leftover, that's cash flow. But when we're paying the debts, our tenants are paying the debts and they're paying it down for us. Between that and properties increasing in value, we're gaining hundreds of thousands of dollars a year in equity just from that. The reason why I don't account for it is it would really, if you saw us in a chart, right? Actually, I do have a chart. You can see if this thing spiked millions of dollars like per year, it would make this very difficult to read. That's a big part of it. Secondarily, I live off of the cash flow from my real estate portfolio. I don't live off any of this money. I let this money continue to ride. This money, this net worth is primarily comprised of the money we have in cash reserves, like money in banks for our businesses, whatever, all the cash, all of our stocks, whether it's in regular accounts, are primarily our retirement accounts, and then money I lend out to other real estate investors. It doesn't account for my real estate equity because my real estate equity, sure, I can sell it and make $5 million. Really, you're going to make less than that because you're going to have closing costs and all that other stuff. It's going to take time to sell. There's taxes associated with it. But I could save that and then invest that into stocks. But my real estate portfolio, that cash flow is what allows me to be financially free. So sure, I could sell it and reuse that money, but I'd rather keep that and keep generating my cash flow. So I don't account for it because the numbers would be absurd here. But secondarily, the cash flow that comes from my real estate is a huge part of my financial, well, it's the sole part of my financial freedom. We're going to get into that so you can understand, although this has been important, this trajectory that I've done here, ironically enough, it has nothing to do with my financial freedom. It does not translate into why I get to live and never have to work again. It has nothing to do with that. What it does do is show the financial discipline required in the level of tracking that's necessary to some extent. You don't need to be as extreme as me, but to some extent to then end up with the results that you have at this point in your journey. So although this $1.5 million in net worth is just writing, right? Just writing and growing and scaling with the lending that we're doing, with the stocks that we have, I don't live off that money. I just let that thing continue to grow. Within 30 years, if I never touch this alone would be, just using conservative 7% interest rate. In 30 years, this would be over $10 million alone if I just never touch this. And that's the goal. Let that thing ride. Let my family have it in the future. I have no need for it because all of my money to live comes from my real estate cash flow, which is why I don't account for that in my net worth because I have no intentions of selling that anytime in the near future, at least not for the next 10 plus years, just to buy bigger assets. The third main reason for why I don't account for it is I bought all of my real estate since 2023 till now using none of my own money. So it's kind of weird to show the equity and all that good stuff, but I've put none of my own money in there. So those are my personal reasons why I don't count for it. Someone else might, and that's cool. They can do whatever they want. So with that being said, here's what my journey has looked like from net worth growth. But really what's more important is the $0 to $2 million of real estate I bought using creative financing, using traditional debt, using portions of my own money. Really, it's $10,000 to buy the first one, HELOC from that to buy the next one, and then doing creative financing to not pay any money to buy the third one, and then a VA loan to buy the fourth one here. Although that has been part of this journey for the first $0 to $2 million, it's that $2 million to $25+ million of real estate that has allowed me to make way more money in passive income, build way more wealth, and that is focused on my core investment strategy: creative finance, co-living, raising capital. All right. So what we're going to do is we're going to talk about how you can apply this for yourself. Hopefully this is enough for you to see what the journey could look like for someone. If you want this broken down in much more detail and you're going to want to follow along and get training on how you can do your own budget and net worth tracking, well, I've got that for you. I'm going to show you exactly where you can grab that. So like I said, my story alone basically does nothing for you unless you apply a similar framework for yourself. So the benefit of tracking all this has been that I have a clear understanding of where I stood financially, what was the most important thing, why I focused on building my active income initially, then investing in assets using my own money, and then growing and scaling by investing in my skills to allow me to buy more and more real estate using none of my own money. And I'm going to show you what that looks like, the levels towards your financial freedom, so you can apply it for yourself. But that's the whole point of this. It's not about my journey. Who gives a shit that this is my journey and I've been able to be financially free? I have a big portfolio. It means nothing to you unless this is entertainment for you, which that's cool. I would love to be your entertainment. But what I care is that I'm providing you the information, tools, and resources so that you can actually achieve the financial freedom that you desire. Whether you're starting with little to no experience or money, or you're someone who has money but less experience, or you have experience and money, you need to go through this progression to get to a point in which you can actually be financially free. I want to lay that roadmap out for you. And that's the most important thing. So the first thing you're going to want to do is you need to do your financial audit. If you don't know where you currently stand, how can you know if you're making progress to achieving your goals? You need to understand, where do you currently stand? Well, how are you going to do that? There's two simple metrics for you to account for, and that is your savings. How much are you saving per month, right? Because you can only invest what you save. And what is your net worth? What are your current assets? What are your current debts? And then what is your overall value? What is your overall financial value? What is your net worth from that? Assets minus your debts are your net worth. Your income minus your expenses are your savings. Well, how are you going to do that? Well, luckily for you, I give all that away for free in my Freedom Through Real Estate community on School. Here is the link so you can do it for yourself. And there you go. That's the link so that you can get this. And I'm going to show you right now what you're going to do. So what you're going to do, so you go to the Freedom Through Real Estate community, right? Absolutely free community, 2,000 members. Every single person here is on one part of their financial freedom journey. A lot of people then progress by joining some of my paid stuff, but that's not absolutely necessary depending on where you're at in your journey. For those of you who want to understand your budget and your net worth, go to the classroom, go to the Blueprint to Financial Freedom. All right. Once you are here, you get free access. This is all there. So you get free access and you get the tools. You can learn about my journey in more detail, at least up through the majority of 2025, as well as how I've been able to scale so massively. And then more importantly, what you need to do to understand your roadmap to financial freedom. So what I give you in there is a budget and financial freedom tracker. You're going to just click it and make a copy, right? You're going to make a copy. That's the demo that I brought up and added my own net worth stats on there. I'm not going to share my entire tracker with you guys. So I shared the table with the net worth growth, but you go here, you grab the copy, and then all you got to do is watch the training on how to use it, right? If you have any more questions, let me know. Post that in Freedom Through Real Estate and I will answer that for you. If you want direct access to that, this is the best way to get access to it, is just go through the free Freedom Through Real Estate community, go to the classroom. You can choose to watch more about my journey, the paths of financial freedom and all that stuff, or you can skip right to this, download the copy, watch the training if you want to. If you do so, what you're going to get is this budget tracker. I'm not going to go too far into the weeds because the whole training on it, but you're going to be able to state, right? This is for you. This is your own personal copy, your income and your expenses. I have a line for projected versus actual. All I really care about is your actuals. That's what you should care about, what you're actually spending. However, there is a benefit to projecting what you think you're making and what you think you're spending, because in reality, a lot of people are spending a lot more than they make, and people are taking home a lot less than they think. So their savings that they think they're doing are much worse. What really matters is your actual. How much are you actually making? How much are you actually spending? And what categories do those go into? Once you fill this out, right? Your home expenses, transportation, living, recreation, whatever, right? You can choose which of these things do you define as a need or a want. I've already preset some of these things for you. Everyone has different desires. Everyone has a different need and different wants. Ultimately up to you what you decide. Once you do that, you get a summary. Let's focus on the actual. Here is your actual income, your deductions, right? What you're given to taxes and all that, your expenses, and then what you have left over as savings, right? What you have left over as savings, what you're allocating towards savings down here, what you're allocating towards savings, and then what you have left over after that, which could just be added to your savings. This breaks it down by category, but really the most important thing is for you to understand the amount that you're saving, right? How much are you saving? Because that is what you then decide to invest with. So this is one of the key fundamental things. Are you making more money than you are spending? If you are making more money than you are spending, that means you are generating savings. That means you can invest those savings. If you are making less money or you're spending more money than you are saving, right? The issue there is that you are going into debt or you're borrowing money. Like, you cannot spend more than you make unless that money's coming from somewhere. That means you're probably getting into debt or dipping into your reserves, and that's going to run out at some point. So the first goal is understand your expenses, understand your income, and make sure you're making more than you're spending. If you are not making more than you are spending, that is the number one financial goal for you. How do you increase your active income? How can you make more money so that you are making more than you are spending? One of the things you could do is reduce your spending, but it's not always logical for everyone, right? Not everyone is able to cut their expenses substantially, and there's a finite amount. If you're spending $5,000 a month, you can cut that $500, $1,000, $2,000. Well, more often than not, it's easier to just make $1,000, $2,000, $3,000, $5,000 more dollars a month if you know what you're doing. Some of the paths to increase your active income. So if you are making less than you are spending, some of the paths to do so. It sounds obvious and it's easier said than done, but get a higher paying job, get a second job. Or for me, what I chose to do with real estate investing and entrepreneurship was, how can I create more income by also learning the thing that's going to drive me towards my overall goal? That was when I went into my bird dogging in 2020. Part of that was I was buying properties traditionally. and house hacking them, which means I had to wait a year before each new investment. Well, I wanted to keep doing real estate, and obviously I wanted to grow my active income. So what I did instead was say, I'm going to bird dog. And what bird dogging simply means is I'm going to find a great investment opportunity for someone else that wants to buy it, and they're going to pay me for the work that I've done. Does that make sense? A bird dog is someone who finds a great deal and brings it to a buyer. The buyer buys the deal and then pays them for their effort. I just paid a bird dog / wholesaler $10,000 for the work that she did to connect the deal to me. I restructured the deal. We did all the closing. We did all the extra work. We substantially changed the entire agreement, but she still got paid $10,000. That was life-changing money for her. For her, they were making a couple grand a month as a teacher. Well, this $10,000 replicated 15, 20% of her income in 1 month, right? In 1 month, she recreated 20% of her annual income. All right. This is one of the big things that you need to do. For a lot of people, if you're trying to pay down debts, increase your active income, build your savings, you need to focus on active income. When I'm teaching people how to buy and hold real estate, or teaching them especially how to raise money to buy and hold real estate, you're probably not in that position right now. Your position is you might have more time. And even if you don't, what you need to focus on is how can you build your active income? For me, if you want to be a successful buy and hold real estate investor and you want to build your active income, bird dogging is the way to do it. You can wholesale, you can do things like that. There's plenty of things that you can do. For me, it's been bird dogging. Why? Because I am developing one of the 3 core skills of real estate investing. You only need to understand 3 core skills to be a successful real estate investor. Deals, where to find them and how to analyze what is a good deal. Money, how are you going to fund those deals, right? Whether it's your money or someone else's, and financing, right? So deals and the money, and then to the successful operations, both through your due diligence all the way through closing, and then your post-closing. So your renovations, your furnishings, your property management, your financial management, right? So the first thing you can do is get paid to learn how to find great deals and analyze those great deals and make money during that process. That's why I think that is substantially better than wholesaling or, transactional lending and all that other stuff. At least this one ties into your overall goal of buying and holding real estate, because you're knowing where to find deals, how to analyze them effectively. More importantly, you're getting confirmation from real buyers on the deals that they want if they buy it, or their feedback on why they will not buy it. You're getting a triple benefit from this. It's massive. Active income right there. So for a lot of you guys, that may be where you need to start if you need to focus on active income. Well, luckily for you, I provide that as well as a free training. I teach you how to analyze deals, whether it's traditional real estate investing or creative real estate investing, as well as getting a copy to one of the best real estate investment calculators out there that allows you to analyze all forms of acquisition. So whether it's cash, traditional, creative, as well as all management strategies. If you're bird dogging for someone that's doing mid-term rental, short-term rental, long-term rentals, or my favorite, CoLiving, rent by the room, it's all in there. You could just grab a free copy right there. Just fill it out. You get a free copy. It's in there and you can learn how to use it. Great. So you can learn how to analyze deals. Well, how do you actually bird dog? Well, I've got a whole training on that. My training is focused on bird dogging for people doing what I do, which is buying CoLiving rentals, rent by the rentals. So I tell you, what types of deals are we looking for? What criteria are we looking for? What types of properties make sense for us? Where do we get data to be able to analyze these deals? How do you submit those deals? And then once again, it's just a calculator for you to grab the link to that. I also go into bird dogging and all those trainings. I also have plenty of videos on YouTube on this exact same topic on bird dogging, but it's also included here. So for those of you who need to focus on your active income, we got it laid out right here for you. Financial freedom blueprint to understand where you're at, personal finances, right? Your budget, your savings, and your net worth. We'll get into the net worth right after, because that's going to tie into, if your active income is good, then your net worth helps you decide what should you be focused on. Then you can learn deal analysis and bird dogging and get paid to learn how to find and analyze great investments, ideally with a buyer who's doing exactly what you want to do. So if you want to do CoLiving, well, I've got it laid out here for you. If you want to learn even more about CoLiving, I've got the free CoLiving beginner's guide, just a bunch of trainings in here for you in regards to that. For those of you who are ready to level up, right, get even more in-depth step-by-step training, in my free community, you can upgrade to the A to Z CoLiving community. It is a step-by-step breakdown of exactly what you need, everything about CoLiving. You just go here, it's $197 a month, you join premium, and that's it, and you get it. That includes tons of trainings, but more importantly, the community, the access, the live support calls. You get access to multiple weekly calls, including project management, operations, deal analysis, whatever you're getting stuck on, you can get support with that. I'll even give you a preview of what's inside. There you go. You also get a bunch of tools and resources in there. So it's a step-by-step, exactly what you've been looking for, the A to Z training on this topic. Co-living, what is it? Different ways to do it, choosing your market, what types of properties are you looking for? So choosing markets, how to analyze those markets, finding and evaluating properties, your acquisition strategy, so your roadmap, what types of acquisitions are you looking for? How would you anticipate your renovations and furnishings for those properties? Because if you're buying a property, it's a single family home like we do, you want to renovate that property the right way and then furnish it the right way to make sure you're being efficient with your costs. You're accounting for everything that you need to, but also you're also projecting it right with your analysis. A bunch of co-living deal analysis, all that stuff, step by step, laid out for you, the live support calls, and a tons of different tools and resources for you, including the A to Z co-living workbook that comes with the 90-day roadmap to help you get your first or next deal. This community, the A to Z co-living community, whether you're someone who's a wholesaler or bird dog, it will help you have a clearer path on how to make more money than most of the other bird dogs and wholesalers. If you are someone who's looking to buy real estate, it'll give you a much clearer path to be able to make way higher cash flow, way higher cash on cash return than your peers who are not doing co-living. It's the same reason why I just closed on another deal today, just signed the documents. We just bought it on a property that's making us $2,400 a month of cash flow because it's co-living combined with creative financing. Same reason why we just went under contract on another deal that's going to be zero money out of pocket to buy it. Same reason why less than 2 weeks ago, we closed on a property when we paid no money to buy the thing, just the money to convert it. Same reason why 3 weeks ago, we bought another $2,200 a month cash flowing co-living property. It's what differentiates you massively from those who are looking for $100 cash flow properties as a, Section 8 or whatever works right now, or you're just waiting on the sidelines for the perfect time, for interest rates, for tariffs, for inflation, all this crap. You're waiting instead of just doing with what the market makes sense for right now. Not only are you making more, you're also providing affordable housing. It's a win-win scenario that also pays you a ton, allows you to achieve your goals faster. I break all that down in here step by step, but there's also a bunch of free stuff for you. So if you're in the position where this could make sense for you, do so. I'm also going to be doing my first multi-day co-living challenge coming up in a few weeks. If you want to be part of that, I need you to drop a comment so I can see to make sure that you're invited to it. So drop a comment down below if you want to be part of my free co-living challenge. We'll go through a lot of this stuff together, and then I'm going to be doing some private Q&A at the end of each session to help you guys with your very specific questions. Everyone in the co-living community gets full access to everything, plus all the tools, resources, and all that stuff as well, including the Q&A. So join this if you'd like. If you don't, great. I've got a bunch of ways for you to make more money. Hopefully I help you make more money that then you can comfortably join this. Don't join this on debt. Don't join this if it's stretching your budget. Don't do it unless it makes sense for you. I don't need it. I'm here to help you. And this allows me to pay for my team to come provide you guys extra support and resources. All right, with that being said, we talked about active income. Let's talk about net worth. Why is net worth so important? So the net worth tab, what you have liquid, what you have in savings, what you have in bank accounts and all that kind of stuff, whether it's checking or savings account, what you have available to be able to invest right away, to live off of, whatever. What you have in investment accounts, so like your stocks, like if you have regular stock accounts, Bitcoin, bonds, CDs, gold. Honestly, I'd probably put gold as a hard asset because it's less liquid unless, whatever. And then your retirement accounts, what you have invested, but you can't really access it for the foreseeable future. And if you want to account for your hard assets, do so. So your home, your rental, if you have rentals, vehicles, money you're lending out, all that good stuff. And then your debts, your liabilities. So your net worth is simply all of the positives, right? Your cash, your investments, your hard asset values, minus all of your debts. That is what your net worth is. If you're being successful on your financial freedom journey, on your financial progress in general, your net worth should be climbing. It may not climb month over month, every single month, but as long as there's not any major black swan events or something crazy that's going on in the economy, especially if there's a lot of stocks tied in there for you, your net worth should be growing all the time. It may not grow, like I said, every single month, But typically, year over year, you should see some massive growth. If you look through my monthly, which I didn't break down, it'd be too much of a spreadsheet. I mean, it's what was this 9 years of monthly data. You're going to see there's times where my net worth goes down and up and, left, right, whatever. But the overall trend is positive. That's what you want to see, right? And every single year, at the end of the year, my net worth has gone up, primarily because I'm investing. Early on, I was investing more than stocks were going down. So like you can get downward pressure from stocks. It's going down in value. But if you're investing more, you don't have a lot invested, like the change down is overcome by the amount you're investing. That's kind of what 2022 shows, that I did have a lot of stocks and stuff like that go down, plus expenses with moving, buying a $1 million+ 3 unit. But we were also investing a solid amount of money at the same time. So maybe other people saw a much bigger, maybe they saw a loss. We were able to overcome that by the amount we were investing. In the last 3 years, for the most part, everything has gone up. There's been blips and up and down. April of 2025, things went down. They exploded back up, right? So all that stuff, they exploded back up. We're at all-time highs. So we see a massive gain. But overall, there might be month over month changes, which is why you see the month over month change. This might be negative and whatever, depending on what's going on and how much you have invested, but you want the trend to be positive. Otherwise, you're doing all this and you're focusing on finances and you're going backwards. Something's wrong. It's a good sign. You should audit what the hell you're doing because it's not working for you. You need to figure out something different. If you have questions on that, let me know and I'd be more than happy to try to help you guys out with that. All right. So, but more importantly, now we're getting into the next level. You have clarity on your budget. Are you making more income than you're spending? So aka, are you saving money? If so, great. You've got the first check in life. That's awesome. If you're not, you need to increase your active income the way that we described it, a variety of ways. My best recommendation, the way I can help you personally, there's other things out there that can help you. The way I can personally help you is all those free trainings I shared with you through here, right? Primarily get good at finding and analyzing deals, bringing them to buyers that do co-living and get paid $1,000, $5,000, $10,000 for the deals that you're bringing to them that are great for them to buy. They're going to pay you based on how good the deal is and how much work you've done. The more work you do and the better the deal, the more you get paid. All right. So that's when people say, how did X bird dog get $10,000 or sometimes even more? Well, they brought me a phenomenal deal. They did a lot of the work. If they get paid less, it's because they sent me an email saying, hey, here's an address. What do you think about it? All right, cool. I'll pay you for bringing it to my world, but it's very different than you doing a lot of the work yourself. So we have your active income and how I can help you increase your active income while developing the skills to be a successful buy and hold real estate investor. Once you do your net worth, you understand how much money do you have. $12,000 and that only covers 2 months of expenses. So maybe you need to focus on building that 2-3 times that amount, right? You want several months of reserves. If you have that and you have money left over, cool. You've got your active income needs met. You're saving money. So you're building this and your net worth has enough wiggle room for you to be able to invest, whether you're investing in stocks, right? Or my recommended path, real estate, right? There's a ton of ways to do real estate, but real estate, that should be your next focus. I was going to lay this out a little bit better, but let's go through the various paths, right? We mentioned active income. If you don't have the income and that you're losing money each month, or you don't have the skills, focus on your active income, focus on bird dogging. If you have your active income, right? You have active income is met, you have reserves, you could still bird dog to develop your skills and experience to get much better at analyzing deals, figuring out how to find deals and analyze them to build up that first key pillar of real estate investing, the deals. If you then have the money available, right? Your net worth is showing you have the money available to buy that real estate. You can do so using your own money. So let me clarify. What do you need to be able to buy real estate? Deals, money, and operations, or let's say the experience, the skills. If you've gotten good at finding the deals, your active income needs are met, and you have the capital reserves available to be able to buy real estate, you can buy real estate using your own money and further build your skill set. All right. I show you how to do that in the A to Z co-living community. I show you how to do that in the free stuff as well. The A to Z co-living community provides you much more of that hands-on benefit and the support as you're going through certain things. Why you see a lot of people in there buying their first or next property more quickly and more safely. But that's ultimately up to you. That's up to you. And I have my Super Investors Mastermind, but that's when we're taking things to the next level. That's my 2023 and beyond, right? Like that's when we're talking about really investing in your skills so you can buy real estate using little to none of your own money. So if you have the money and you want to do the work, right? You can bird dog to build more money, or you can buy real estate, building your experience and building your real estate resume, which is going to play a major role into an upcoming path that we talk about. If you have a lot of money, even like $100,000, $50,000 or more, $100,000 or more, and you don't have the time, the experience, or the desire to be the operator, you could be a capital partner. I have been able to build my portfolio alongside $6+ million of capital partners' money. I find the great deals, I analyze it, I find them, right? I bring them to them. They bring the money to buy, renovate, furnish, operate, reserves for the property. I get the deal, they bring the money, right? I structure the financing and all that, but they bring the money. We buy it, and then we handle all the operations. That's why I've been able to go from 2 million to $25+ million of real estate in 3 years. It's because I've been able to raise $6+ million from capital partners so that we can co-own these assets together. If that is you, if you have money, but you don't yet have the experience, the time, or you want to be more passive and just want the benefits of real estate ownership without doing the work, consider being a capital partner. That is honestly the dream goal for the vast majority of people. That will be me in 10+ years. I'm already lending money to investors. I will just be a pure capital partner in 10+ years, because not everyone wants to continue being the operator, putting the time and effort you have to on the front end to get and operate these deals. If that's you, great. I got a very simple form for you to fill out. Let's take some time to connect and understand where you're at, how quickly you're looking to invest, how much you're looking to invest, and let's help you find the investments that make the most sense for you, whether you are trying to be passive or you're trying to learn through that experience and build your resume. So we talked about building active income. If you have your active income, you have reserves, you can either be a capital partner if you want to be less hands-on, or if you want to be more hands-on, you can buy the real estate using your own money, right? Or develop the skills by being a bird dog. So then when you want to buy those deals, you know how to find those great deals. Then part 4, the big launch pad that changes everything. Once you've gotten very good at understanding where to find deals and determining what is a great deal, as you've built your knowledge and experience in the real estate world, whether it's as a wholesaler, a bird dog, a lender, and a buyer of real estate using your own money, somebody who does long-term, whatever, you then can scale your portfolio through raising capital. You can do what I've done to scale my portfolio massively, which is I've raised $6 million to buy my $22+ million of real estate over the last 3 years. It would have taken me 40+ years of making $150,000 a year and saving all of that straight for 40 years to have saved $6 million to build the portfolio that I have today. It's the biggest bottleneck for most people. First, they don't know how to find deals. Great. Do that through bird dogging, do that through wholesaling, do that by joining the A to Z CoLiving community and taking advantage of all the resources there, exactly the way I teach you how to do it. Once you've got the deal side, the thing that stops the most people after that is they don't have the money to buy the deals. They've ran out of money, or they never had the money in the first place. They cannot buy real estate. I'm going to be very honest for you all. For those of you who don't have your active income needs met, who don't have any real savings for yourself, who don't have necessarily the skills to own and operate properties, it's going to be very hard to raise capital. You can potentially raise money from someone. I'm not saying it's impossible. It won't happen, but I'm telling you, it is much easier to raise money on real estate when your personal finances are solid, when you have your own personal reserve. So if something goes wrong, especially early into the ownership of property, you can help solve that problem. It's not on your capital partner. And you have experience in real estate. That all makes it so much easier to raise money on deals. That is where most people get stuck, right? So the A to Z CoLiving community, my Super Investors community, even the free trainings help you build your skills and knowledge. And then you develop your experience through doing the work as a bird dog, as a real estate owner, as a capital partner, whatever, right? That's how you build your experience. You're developing your skills, you're putting them to action, right? Developing your experience, then skills in action, develop experience. That is your experience. That is your real estate resume. That then makes it much easier for you to raise money and grow and scale so much more quickly. If I only use my own money, instead of having $25+ million of real estate, I might have been at $3 or $4 million now. That's nothing to laugh at. That is freaking sick. That is incredible, right? For the vast majority of people. And if that's what you want to get to, awesome. Understand it's going to take you several years and lots of savings to get there, but it is totally a good path. I know people who want to buy one property a year for the next 20 years, and that's their path. For me, I wanted this thing done I'm not doing this for my passion of real estate. It's always been around financial freedom, helping other people buy back their time so they can live their life doing what they actually care about, including for myself to be able to spend the time with my family anytime, whenever, wherever, be able to take advantage of all the awesome opportunities that come my way, travel, and not have to worry about money ever. That's why I've done this. And I wanted to do it as quickly as possible, which is why I had to develop my skills to buy better deals through CoLiving, to structure those deals better with less money down through creative finance and not be dependent on interest rates and inflation, all that other crap. And then raising money so I could fund those deals, $100,000 to $120,000 on average, fund those deals, right? To fund them to actually benefit from the cash flow and wealth building. If I didn't, then I would just keep bird dogging, right? Because if I can't fund those deals, then I have to sell them to someone else who can fund it, and they get all the major benefits in the long term when I would have gotten the upfront 1, 5, 10K of benefit up front. But that didn't lead me to my passive income. So what I want you guys to truly understand above everything else is you need to understand where are you currently at financially. If you don't know where you are financially, it's going to be very difficult for you to be successful in understanding what should you focus on. You might have an idea of where you're at, but unless you truly know it's on a spreadsheet, it's on paper somewhere, you're going to have a very hard time understanding, are you making more than you're spending, right? Are you saving money? Or are you getting into more and more debt? Getting into more and more debt, that's the worst thing you can do on your path to financial freedom. Don't start with a bunch of bad debt, consumer debt, credit card debt. Real estate debt's one thing. Raising money is one thing because that generates you more returns. But if you're just doing it to live your life, that's a very bad use of money. So do your financial audit to figure out, do you have active income that is exceeding your expenses, right? If not, you need to generate more active income. I gave you the various ways. My best way to help you is through bird dogging because I have free trainings and tools and resources for you and tons of buyers in the Freedom Through Real Estate community, especially the CoLiving community, that are looking to pay you to buy your deals. All right. So there are the buyers right there for you looking to buy your deals from you. Plus my super investors, they're really looking and they have the money ready to go to buy those investments. Then it's net worth. How much money do you have available to be able to invest in general? But like I said, stocks are great, but they'll take 40 years to get there. When my goal was to get there sooner. And once I did the math, I had to go all in on real estate. I couldn't save my way there. Investing is fine, but like you just can't get there fast enough through stocks. I won't get into the math behind that. It's all laid out for you in the financial freedom trainings I have for you in Freedom Through Real Estate. Then you could decide, okay, I want to buy real estate, right? Whether you want to be the one who does the work and own it yourself, or you want to just be a capital partner, you can do either of those routes. If you have less experience and less time, but you want to own real estate and you have the money, leverage your money to come and co-own properties. Obviously, I'm one of those people that you can co-own properties with. You can also do it with plenty of other people. Just make sure that they are, as an operator, they are good operators. They're trying to take care of you in their best interest. Like they're trying to take care of you. They have experience, they have knowledge, they have their personal finances straight. They have reserves ready to go if they need to. They have good credibility. They have good referrals, references, all that stuff. Make sure the person you are partnering with is someone you actually want to partner with long-term. They're a good operator. Once that is good, you've found your 1, 2, however many people you want to do that with. The next most important thing, right? You need both these checks, great operator, great deals. Make sure that the deals make logical sense. Make sure that they are actually analyzing it and presenting to you what the deal is, why they need the money, where the money's going, how much money you're expected to make. Obviously, things can go for better or for worse. Things can change when you're owning a property. Things change all the time. However, do they have a plan to take care of that? Are they going to handle that? Like, vet the operator and the deal if you're a cap partner. Or you can use that money, instead of partnering with someone else, you want to be more hands-on and develop further your experience, you can do so by buying those deals yourself. Whether you're doing it, there's a ton of ways to buy real estate. You can house hack like I did for my first several properties, right? Buy a multi-unit property, live in one unit, right? You're doing that through conventional financing. You get great benefits like lower down payments, using a VA loan, FHA loan, conventional loan for 2 to 4 unit properties. You pay, 0, 3.5, or 5% down to buy a 2 to 4 unit property, live in a unit, rent out the others. Or you can buy a traditional investment, right? You can buy things using the Burr model. You can buy properties using creative financing, whatever, but you're using your own money to fund the acquisition, the renovations, and the furnishings. All that is to build your skills and your experience by putting those skills into action so that you have the clear understanding of deals. If you got the money, you could fund those deals, and you're building your overall experience of also owning assets, which then makes it much easier to raise capital. Once again, I'm not saying you need to have a huge net worth, tons of active income, tons of reserves, 50 properties, like all these things before you start raising money. But it's in the best interest for you and your capital partners, well, definitely your cap partners, that you are someone who is financially ready to raise money to buy real estate. Both you are financially fit to do so and you can handle problems as they arise, and you have enough experience or at least enough support, community support, like my super investors community has, that if something comes up, they have a direct line to successful real estate investors who are doing the same thing as them that can help them solve their very specific problems. So if you are someone who is looking to grow and scale your portfolio and you need to get better at getting deals, you definitely know you want to grow and scale through raising money, and you're in a good financial position, then maybe super investors is the right fit for you. If that's you, reach out to me. If you've got 50K in reserves, right? I say 20K, but if you have 50K or more in reserves, you want to be the person that I am, like the strategy that I do, but also be the one that does the work to get a lot of the benefits, then maybe super investor is the right fit for you. We can talk about that. Or if you want to be more passive, okay, well, fill out my capital partner form. Let's see if we can get you ownership of assets without you having to do the work if you want to be less hands-on. Personal finance to determine if you need to focus on active income. If your active income's good, great. Next, check your net worth to validate your reserves. If you have enough reserves, you can invest those reserves. You can either invest that to buy real estate using your money or invest that with someone else so that you guys can co-own assets, or you can lend money to them. And if you're looking to really grow and scale, your money is now actually less relevant because you cannot grow and scale fast enough using just your own money unless you're making tons and tons of active income, right? But typically people cannot buy multiple properties a year using just their own savings. You can't afford to save and invest $500,000 a year to buy 5 properties a year, right? So if you want to do that more scalable, you need to develop capital raising. All of these are progressions of your financial fitness and your skills that you're developing along this journey. This is your 2026 roadmap, basically helping you identify where are you at, what should you be focusing on? Active income, experience, skills, experience, and then really accelerating that if capital raising is the thing that you need to get to the next level. Before we go, what I really appreciate that you guys do is go and show me some love if you don't mind, whether it's on Instagram, right? I'd greatly appreciate it. On my YouTube channel, I don't really ask for this kind of stuff, but my big goal this year is to help more and more people. It's not going to happen by sharing information to 10, 20, 50 people at a time. I'm trying to help hundreds, thousands. By the time my life is all said and done, I want to help hundreds of thousands, if not millions of people. That means I need to reach bigger audiences, which means I need to take social media more seriously, which means I need to be that cringe guy that's telling you, hey, make sure to like and subscribe, share, post, whatever. I'm not good at that. But if I provide you value, please provide me some value by doing this as well. With all that being said, I hope you have a very clear roadmap on what you should be focusing on and what your next step is. And for literally everyone, unless you clearly understand your budget and your net worth, you need to do that audit. And I give you the step-by-step roadmap on how to do so. And I hopefully explained exactly how that will help you progress. For everyone in Freedom Through Real Estate, I'm going to make a post in there summarizing a lot of this stuff, giving you the next steps as well. So go in there and make sure you look out for that post, because I think that'd be very valuable for you guys to understand where I recommend you focus based on your active income, based on your reserves, and also based on your desire to be active, like actively involved with putting in the work, and your time availability. So with all that being said, I will make a post in there for you.